All right, it looks like we are filling in with attendees, so let's get started. Thanks everybody for joining us today for this Comply Summit event with Chris Tocin of M&T Bank to discuss the usage of data and analytics to thrive in today's world. My name is Michael Gibney, and I'm a solutions architect at PerformLine. One of the things I do is help our customer data teams integrate PerformLine data into their overall risk and compliance strategy, which is why I'm so excited to be speaking with Chris today. Chris, before we dive into all of our content, can you give us a quick background on yourself, your position at M&T Bank, and what you've been up to the last couple of years?
Yeah, absolutely. So hi, everybody. Chris Tocin. Nice to see everybody virtually, as we've been doing for the past, year and a half or so, if not a little bit more. I've been with M&T Bank for about 15 years, actually, most of my career. Started off doing IT audit work, and then got to jump into doing some technical work in our BSA and AML teams. That was in the middle of a written agreement that we're under. If you guys are all in banking, you probably heard about that. We got an acquisition delayed because of it, Hudson City, and had to focus heavily on our technology upgrades and data governance, data validation, things along those lines. Which leads me to what I've been doing for the past 2 years. So I have been got a position where we developed out, or trying to develop out still, a data analytics and automation team that supports all of risk management and regulatory affairs. So all of our lines of defense, second lines of defense, under our chief risk officer. We're really trying to think differently about how we identify and mitigate risk. Right now, data is really a supporting factor in identification and mitigation, and we're really trying to change the culture, switch it over to more of a data driven, that data is driving the decisions, driving the factors, driving the mitigation, identification, and not only identifying risk that we've never seen before, that we don't know is there, but another big part of it is identifying and proving out assumptions that we've made within our data. Shows that our policies, procedures, are working as designed, that our first line is taking these things to heart and taking risk management to heart. And it allows us to focus our efforts on where the risk really might sit within the organization. So it's been an uphill battle. COVID didn't really help us out by any means. Doing everything remotely while trying to get people to think differently is not the easiest thing, but we're getting there with baby steps, quick wins, and then hopefully setting up our strategy effectively in the way that we want to get people to identify that there's areas for opportunity here, and that we could utilize data and technical innovation in much different ways, managing risk.
Perfect. Thanks so much. We're going to cover a lot of that today. So we're going to cover a few topics spanning that data team development, managing that change across your org, developing a path from that initial data insight to analytic automation. And just like you said, some key learnings from executing on all of that during a pandemic. Folks, we'll be doing Q&A at the end of this session. So please be sure to use the Q&A box at the bottom of your screens while hearing from Chris today. You can drop your questions into there. We may be able to answer a couple on the fly, but we'll certainly swing around at the end of our chat here today. With that said, let's dive right into it. So Chris, when building out a data team from scratch like you have, there's a ton of work that goes in before even the first dashboard is built. Can you share your thoughts and maybe even some stories on how you've gone about acquiring both the right data and the right people to execute on it, and marrying those two into a strategy for some of those quick wins like you were just saying in the early days?
Yeah, absolutely. So 2 years ago, pretty much to date, the team was started with just me, of trying to figure out what other approach is going to be of setting this up for future success, right? It's not just looking out the next 6 months, the next 8 months, next 12 months. So what are the things that we need to do for the next year, 2 years, 3 years? Not only from utilizing data appropriately and getting the right people to help support and drive this thing forward, but also data is the foundational factor and driving factor for technical innovation. If we ever wanted to get to machine learning and artificial intelligence. So the very first thing that thought about doing was, what are the talent profiles of people that we need? I've made the mistake in the past of saying, okay, I know Mike is really good at data. I know that Allison is awesome at visual analytics. I know that Vicky is fantastic with, utilizing more of our technical analytics platforms like R or SAS. But I didn't want to do that. I wanted to think about not cultural fits, but cultural adds to the team. So we started off with talent profiles, and the very first person we went after was somebody that was could help think about strategy, right? How are we going to set our stakeholders up for success? What does our intake process look like? What does our output process look like? How are we going to defend any judgmental decisions that we have to make in front of our auditors and regulators, et cetera? So it was setting up that foundational ground level work of policy, procedure. Do we have regulatory concern? Do we have audit concern? And then building on it from there. So that strategy helped out pretty significantly in the first 3 or 4 months, which, by the way, first 3 or 4 months, they were 0 wins. We didn't even have access to data yet. We didn't even have any analysts to do the level of work. It was just thinking about what baby steps we're going to take to get there. The next was clearly you need access to good data, right? Sure. So that was the first talent profile we went after. From there, it expanded. And this is my opinion only, but listening to other folks that are much smarter than me in this space, it goes data, then it goes technical analysts, then it goes data visualization analysts, somebody to tell the story, right? Your data is only as good as your output and only as good as the story that you're telling. But around those talent profiles, there was one area, and it goes back to the data, where we did not just focus on the profile of the talent that we were looking for, but a person, and a person in particular. And there's one reason why. At least where we're sitting at the bank, the data is very, the best way to say it is sort of bifurcated throughout the environment. There's a bunch of different systems that are sources of truth for different areas of the bank. Our commercial bank has one, consumer bank has one, M&T Securities, Trust, all of those. And we needed somebody that understood that, also understood the players that own that data. So data gets hoarded quite significantly. And I don't think it's just in our environment, where people are very reluctant to give you access to that data. They don't want you to mess it up. They don't want you to manipulate it. They don't want you to change anything. So we needed to find the right person that knew the players, knew where the data sat, and could get through sort of the popularity contest of, get in line if you want access to something. So we went after somebody that had pretty significant experience in our technology space, in our data space, with M&T, that was just looking for a new opportunity. So she ended up coming over, and literally within 6 weeks of her coming over, all of a sudden we had access to our enterprise data warehouse, all our transactions, our wire room, our ACH data, et cetera, because she was able to speak the language, right? So it was a big deal. So, if your environment is like that, where people are hold their data really tight to them, but you need access to it, I implore you to look for the right person, the person that knows your institution, knows who they're dealing with, what they're dealing with, and can speak that language. Going in as just risk management doesn't automatically give you a free pass to get access to that data, right? There's things that you have to do to ensure security, to make sure that there's not an inherent risk with us taking it on, et cetera. So that was a pretty big deal. Once we were able to get access to the data, then it became, what do we do with it? That's where the analysts came in, and that's where the visual expertise came in. All of that being said, if we were to ever just go into somebody and say, hey, look at what I found in this data, chances are somebody in operational risk or somebody in compliance risk management is going to be like, yeah, but did you think about the qualitative measures? So we couldn't just produce output. We needed to go and find our early adopters. We needed to go and find people that were really ready and willing to think a little bit differently on how they're approaching risk identification and mitigation, utilizing that data. So we, the biggest thing was, the next step was finding those early adopters to go and jump in hands first with us, and really get their hands dirty and see what things we could come up with.
Sure. So in regards to those early adopters, now that you have your team assembled, you've got your data inside of your team, you're ready to act on it. Absolutely. The next step is going out and finding people outside of just your team to become those early adopters and stakeholders in the projects that you have. Can you walk us through how you go about finding those early adopters, those champions outside of maybe just your own team, how you enable them to kind of tell their own story around the organization, and then start showcasing some of that ROI that you've been generating?
Yeah, I cheated.
Oh.
Is the best way I could say it. I came from a background in BSA AML. I knew in BSA AML where they had their downfalls of getting after data, of looking at transactional behaviors a little bit differently, and quite honestly, that they just didn't have the talent of people or the time, quite honestly, to be able to dig into those additional things. So I went after the areas that I knew. So BSA AML was one of them. The second was our compliance testing group. I have a background in audit. I know what they're looking for. I know what their data folks are trying to get after. So the very first thing was not, here's an output I could do for you, but hey, BSA AML, I know you don't have access to this data set. I do. Or I know the person that could go and get it now. So let's go and get that and let's see what it tells us. Hey, compliance testing group, I know that you're doing a testable unit on mortgage. And I know that mortgage is a third-party vendor and it's really hard to get access to their data. We already have access to it. We know the database structure. Let us come in and help you. So those are the first things, is just like kind of raising my hand and getting involved in the meetings that just because I knew the people to get involved with. From there, it kind of expanded to, okay, well, we have this data now. What can we possibly do with it that allows us to show significant output? So one of the very first things that we did was a very simple data set of looking at the number of customers that we have over a certain age group, right? We're helping validate some CCAR scenarios. And one of the biggest, not the biggest, I should say, but one of the scenarios we were looking at is customers that are over a certain age that do not have online banking presence. Okay. And what that really means is that they're getting paper statements every month, every 2 months. So if there's a 90-year-old person that has a balance over 80 grand, that gets a statement at the end of every month, they have a much higher chance of getting their money stolen, right, in a worst case scenario situation, than a 20-year-old that maybe has the same amount of money, but his online banking has activity every single day. What we found out was we had not a ton, but 500-ish customers that were over 115 years old. The oldest person in the world is like, what, I think 112, 113.
Yeah, I think something
so
like that.
Okay, so we have this customer base that's over 500 years old. Oh, by the way, their collective balances are like 4 or 5 million. Clearly, we're sending statements to an address where those people aren't there, or maybe they are. We just don't know about it. Yeah. So we, that was done for CCAR, but all of a sudden we're like, holy moly, our retail risk people need to know about this. Let's reach out to next of kin, say, that this exists. Maybe or may not be going through an escheatment process, which then the money's tied up in the state government. Let's get out in front of it. And what that ended up turning into is not just a risk management mitigation of saying, hey, there's money here. You guys might want to, family next of kin, you might want to look into this. But then it provided us an opportunity to cross-sell as well. So it wasn't just thinking about risk management, it's about thinking about, how can we utilize this for the bank? So if you reached out to a next of kin that maybe is a granddaughter of a 115-year-old that's got 100 grand sitting in a checking account, okay, well, that money's probably going to that next of kin. Hey, you know what? We have opportunities to invest this into the market, or here's some products that you might be willing to do. And you'd be surprised how many people were just thrilled just to get a phone call and say, hey, thanks for letting us know that this money existed. We had no idea, right? Because there wasn't good paperwork, et cetera. So finding those little quick wins and then finding ways to take the right hand approach to it, to say this isn't just the end of our analysis. What I'm really trying to get at with that story is two major things. Number one, that allowed us to build relationships not only with somebody within our risk management department, but also our first line risk officers, who our first line people are dealing with the risk up front, right? They own it, they see it. And they start to tell our story. Hey, guess what this team did? They had access to data. Maybe you could utilize it in some other space. We're not in the business of trying to self-advocate. We're now in the business of letting people tell the story for us. And so those quick little small wins started building into bigger wins. The second was, and it's a mantra that my team has now, and it's something I never thought about because I never had to think about before that first analysis really happened. And that is, we want to live in the problem. So if you're doing analysis of data and you're just doing what a stakeholder asks you to do, my thought process is that you're missing something that's right in front of you. So you need to think creatively of not only what give the stakeholder results that they need, but that data is telling us something else for some other area within the division, within the bank. And that's where that approach came, with reaching out to our retail risk folks to say, hey, you might want to look into this. Data cleanup, number one, and then opportunities for taking different approaches. So it was really surprising to see that. I saw a question pop up. Was there anything that surprised me when I was building out my team? Yes. And here's the biggest thing that surprised me: how many different definitions of analytics there are within the organization, and very specifically with the stakeholders that you're trying to support. Analytics is not reporting. It's not ad hoc data pulls. Maybe those are the starting points of it, but that's not the end game. So trying to build a team that are true, analytics experts that understand what advanced analytics means, and then having them go and execute when somebody's like, I just want a pretty report that's done through Tableau or through PowerPoint, was a shocking factor to me. So there was an educational piece that had to happen with our stakeholders, and quite honestly is continuing to happen with our stakeholders, to understand where we bring value and where our reporting center of excellence brings value, and our collaborative partners that we have in that space. So I'm not sure if that's whoever asked that question, if that's very specifically what you asked for, but that was the biggest surprise of how many people thought differently about what analytics was and how it could perform what it needed to perform for you. So I know I got off track there a little bit, Mike, but
That's great.
That's the biggest thing.
I think one of the biggest things that I took away from that is that when you're telling this story around the impact that your team was having, it's tied directly to a real world story. We can show real impact. And that's the kind of story that can get communicated across an organization, rather than, wow, look at this whiz bang dashboard that came out of this team. It's, let me tell the story of what change we created. Because
dashboards tell you what used to happen, right? What happened in the past. And that's all well and good, because that informs decisions if we're making the right ones or not. And we do that without a doubt. We create dashboards. We put people in positions to understand how the decisions that they're making, the impact of those decisions. But where we want to get to is really more predictive in nature. And before something comes down the pike that exposes us to major risk, we can identify that, maybe not catch it before it happens, but as it's occurring, instead of 6 to 8, 12 months down the road, it provides us an opportunity to it. And that it also goes into ROI a little bit. Yep. So I'm assuming that question was coming up, so I want to get into it. ROI in the risk management space does not mean 100% of the time does not mean that we're saving time or saving money. It can mean that we're identifying risk quicker, as close to the event as possible. It can mean that we're identifying risk that we've never known existed before, or it can mean that we're proving out assumptions and we don't have to focus there, right? I said that earlier, so I'll tell another quick story. Marijuana related industries, right? Federally legal, you cannot bank those as a financial institution in the United States right now, unless you're maybe a credit union involved in the state that has recreational marijuana. we have very, very strict policies and procedures that we will not bank marijuana related businesses within M&T. And so that's always been the running assumption. We don't have the exposure. Something could always slip through the cracks, right? So all we did, and it was very simple, is we took a list of names that could be in marijuana related industry, right? Hemp, weed, ganja, you name it, whatever could possibly be out there. Let's get crazy. Let's get creative. Let's run that up against our entire customer database and account database. Let's see if we get any hits. And we did. We got probably 100, 150 hits, but all of them was like a weed company, right? Meaning like going out and spraying your lawn to make sure you don't get weeds.
Yeah.
Or a holistic drug company that was dealing in CBD oils and hemp, which is perfectly legal. So it proved out that we did not have situations that were banking those types of customers. Is there a chance things were still slip through your cracks? Absolutely. But it's the second mantra that we have. So the first was we want to live in the problem. The second is do not think that it's data in and gospel out. Right. Too many stakeholders think that when they get an output from an analytics team, that's the whole truth, nothing but the truth. That's not the case, right? We need to make sure that we're telling a story of what the data inputs are to data reliability, where there could be data drops and manipulation, things along those lines that could get in the way of decision makers. That we have to be able to explain and not only give them an output, but give them enough education on what the input was to that output for them to make an informed decision and understand that there still could be some inherent risk within that decision.
So we chatted a little bit about this, but I want to talk more about that data reliability piece. What kind of checks do you put in place, for data reliability and, maybe even like critiquing the data quality?
It's a great question. We as much as we possibly can, because I don't say we never do it. We try not to critique our data owners whatsoever. If I critique my data owner that I've been working with hand in hand and diligently and very carefully making sure that relationship is okay, if I tell him his data is crap, he or she is not going to want to work with me anymore. They're not going to want to give me access to that data because they're going to, even if it might be true, it puts them in a weird and awkward spot. So we try very hard, unless there's something extremely egregious, we do not critique the data. What we do though is we set up Python scripts. So the data manager that I told you that we brought over that worked in our data quality group for 7 years, wrote Python scripts over our data sets around which data points we're going to use for that specific analytic. And they can be automatically run through Python, click of a button, whatever it may be. But what we do is when I produce an output for the stakeholder, I then tell them, based off the data points they're going to use to make a decision, how reliable that data is. Is then in their hands to make the decision if that data is reliable enough for them to make a good qualified decision on that data. Like an example there, this isn't a real life example, but say they needed to utilize their data to understand how many customers we have over 100 years old. What I could do is say, all right, over our population of 3 million individual customers within the bank that we looked at here, 15% of them have an invalid or a date of birth that just doesn't make sense, right? Somebody under 16, because we don't bank with them, somebody over 110 because they're probably not alive. So is that 85%, of good data, is that good enough for you to make a decision upon? They then have to make that decision of yes or no. If the answer is no, we try to find ways to supplement that data, see if there's other data sets within the organization that can help us out. It's just not trickling into what we have. But we really put the decisions in our stakeholders' hands to say, is this good enough? Eventually I could go back to the data center and say, or a data office and say, hey, this is what we found. This potentially has some data quality issues that you're running up against. But as of right now, my job is to support my stakeholders to make sure that they could start thinking about data a little bit differently. If I get into the business of critiquing, I have a feeling it'll put me in a really weird spot right now. So that's kind of the approach that we take. So we run those scripts as much as we can over the data sets that we're utilizing as we produce output.
Perfect. So we've talked a little bit, the last maybe 15 minutes or so about like impact outside of your team, but I do want to talk about what's going on inside your team now.
Sure.
Let's say, your organization is becoming more and more data driven. Usually leads to like a growth stage within data teams. For many of us, this is the stage that we've all been waiting for. It's a lot of fun. We're iterating on our work. We're testing and learning new strategies, maybe launching some new data products and possibly expanding our team. Can you share some of your methodologies around capitalizing on this growth stage and what you've been putting into action at M&T?
Yeah, absolutely. So 2 years ago, you asked me, and I'm like, we need to create data output. We need to help people make decisions, et cetera. And this is going to be the driving factor. I've changed that approach. We've changed the approach I don't want to say significantly because we still do that level of work. But I consider our analytics team to be a research and development team. So most of what we're doing in the risk management space now is not only running, we'll run ad hoc analytics, but if we identify a new risk, that new risk existed 10 years, maybe not 10 years ago, but it has existed in the past. And guess what? It's going to continue to exist into the future. So what we now have is a research and development team that does that ad hoc, creates that output, does the data reliability, and then we help massage that into some level of production and automation as we move forward in the future. So first off, around our analytics team, we don't care what tool an analyst works in. It could be Excel for all I care. It could be SAS for all I care. RStudio, Python, Tableau, ClickView. As long as the bank has the ability to give us that software, I'm all for it. It doesn't matter how we get to the end result, as long as we get to an end result that's explainable and actionable is a big deal. But what we end up doing is now that we have the foundation set up, we actually have an automation manager. And we're currently building out with our technology teams an agile team. So a group of technologists that could develop out what we want to do. So that what it helps us do is the research and development designs out how we're going to pull the data, where we're going to get it from, what our queries look like, how we're going to execute it. And then our automation team takes it the step further to create either continuous monitoring or exception processing. Risk management has in the past has been a lot of paper, a lot of reports, and people, check next to the reports. We don't want to do that here anymore. We want to do true exception processing. So one of the POCs that we've been working on has really turned into, all right, we do data validation exercises with our BSA AML group. That used to be done once every 18 to 24 months, right? Point in time, let's pull a data file. It's going to take us 6 weeks to understand it and go on from there. Well, with one file in OFAC right now, and we have 150 more files to go, we wrote Python scripts around the data validation activities. And now we have a job scheduler that every night, when the file hits our OFAC server, it also gets sent to us. The Python scripts are run up against it that our analytics team designed and developed. And if something breaks a tolerance rule that was developed by our BSA AML counterparts, an email is automatically sent to that group to say, hey, you have a data issue. You need to go and research it, understand root cause, get it fixed. So that's kind of where we're taking it. And so the steps of getting there, at least in my opinion, was foundational data, start to understand the need for analytics, and then analytics turns into automated schedulers, turns into robotics process automation, turns into machine learning, turns into artificial intelligence. Are we even close to getting there? Absolutely not. Do I feel like our strategy is even remotely set up to be 100% successful on all the things I've talked about so far today? No, I don't. I think we have a long way to go. But if we have the foundational elements and the expectations of where we're going, and I now have the early adopters telling everybody what I can do and how we can do it, then we're setting ourselves up for success to get there.
Yeah,
and analysis takes a long time, right? Analytics is not an overnight thing. If we're living in the problem, our analysis is truly never done.
Sure. So we would be remiss if we didn't take a moment to discuss how the pandemic has influenced all of this. Because like I said, it's just been the last couple of years, and everybody knows what we've been dealing with the last couple of years. So, in a lot of ways, the pandemic was a catalyst for growth amongst a lot of our teams. Can you share, some strategies that your team needed to develop to just cope with the pandemic that you think are actually going to be adopted and propel you going into the future?
So the pandemic actually helped us quite significantly. You know, the biggest things that started happening in the banks was really around PPP loans, unemployment insurance, and idle loans. Fraud was everywhere, and the biggest thing was this was a new product, new money, and monitoring transactions in ways that we've never had to do before. We were quite struggling out of the gate, and I'm going to loop this into the question that popped up over here: is how do we balance speed versus quality?
Perfect.
We were struggling with finding early adopters and finding opportunities to get people to think a little bit differently. And when we did get people to think differently, all we wanted to do was get it done right now, get it done right now, get it done right now. The pandemic forced us to think about how we were doing that approach, because the speed ended up giving us bad quality. So we had to change on the fly and had to be very quickly change our thought processes. So let me give the example of the speed versus quality thing. When the PPP loans first started coming out, okay, we decided that we should look at as soon as the loan hit the bank, right? The loan funding hit the bank. We want to look at transactions, the first 15, 20, whatever, 30 transactions that went out of that account to make a determination of how these people are utilizing money. Okay. So it was like our biggest thing was, all right, if 100% of that loan funding goes somewhere else, we have an issue. We need to get in the hand of our investigators right away. Let's go super fast. And by the way, we could look at it because it's dollar amounts, right? Very simple. We did that. About 98% of those situations where 100% of the loan volume went to another account or got transferred out to another bank was for operating accounts. So people could actually control their accounting and show and prove to the federal government that they're using it for payroll or utilizing it for forgivable things underneath the PPP guidance. We were wasting our investigators' times. We sat there and thought, oh my God, we're in a great spot. Look at all the value that we're providing. Look at what we're finding. Come to find out, it was nothing. So we had to change our approach immediately and start to think a little bit differently. So the pandemic, number one, threw us into the limelight because nobody had access to that data. Nobody had the time and capabilities to throw analysts at it. And we had a lot of teams coming to us for help. So all of a sudden we went from, all right, we're scraping the surface here. We're trying to find people to do it. We have ones or twosies. To next thing you know, April of 2019, we're just getting hammered with requests, right? Yep. Can you create these dashboards? Can you look at these transactions? Oh, by the way, Washington State unemployment just had a major fraud up against them. Can we start running a quick analytic to see if any of our customers in New York State were getting Washington State unemployment benefits? Yeah, we could do that, but we have everything else going on too. So it number one, it helped us get access to data. It shed light on what we could do. But number three, selfishly, it helped us realize that not every analytic that we were going to do was going to provide value, because we weren't thinking about it in a way that a business was thinking about it, or even the customer was thinking about it. So we needed to understand that the empathy part that comes into your data, right? What's really going on? I mean, think about an empathetic situation where, people are doing fraud from an unemployment insurance perspective, right? Well, they lost their job. They had 3 kids at home with daycare because their daycare got closed. And they're trying to figure out how the hell they're going to get food on the table. Yes, that's fraudulent activity. Yes, that's taking advantage of the situation. But there's got to be some level of empathy that comes into play to understand the whys and why people are doing the things that they're doing. And if you could think about it from that perspective, but you could also think about it from the business owner that's putting their money into an operating account and trying to do the right thing. On paper, in an analytic, in the data, it looks to be the exact same thing. It's not. It's way different. So we had to get much better at understanding not only what the data said, but what the end game was, what the results were. Not that we were ignoring everything, but we worked hand in hand with our investigators and our stakeholders that knew that stuff very thoroughly for us to then change our approach to our analytic. And then, by the time it was, the third round of PPP loans in December of, 2020, we were much more targeted on where we were finding suspicious activity. And I'll tell another quick story around that.
Sure.
What we were finding was our customers at M&T were not really committing any type of misuse of funds for PPP because they're our customers. That's the only people we were loaning to. Well, there was another group of our customers that was getting loans from PayPal, from Cabbage, from other fintechs and companies that were just submitting application after application after application. When we looked at those transactions that were coming out, a lot of them were fine and normal. Well, things started spiking where we would see businesses sending out Zelle payments after loan funding. Our investigators, once they started digging into that, there's something, and don't quote me on this number, but it's some crazy number that if a customer got a loan from a non-bank financial institution or a fintech, and a majority of their transactions after loan funding were Zelle, it was something like 35% of those was SARable activity, was suspicious activity. So that helped us, let's loop it all back to those questions of the pandemic helped us and changed our strategy of it wasn't just about the speed and about what we were putting out. We had to be empathetic. We had to understand the reasons why, and we had to start getting much smarter and much more pinpointed at what we were doing because we were inundating our investigators with things that were coming out. So it was that our ability to adapt, be agile, I'll use the cliche term, not be afraid to fail. That put us in a spot that we could then be trusted partners, where we have a significant relationship with our BSA, AML teams and our fraud teams now, because we were able to execute hand in hand with them instead of just throwing something at them and say, here you go, have fun with it.
Yeah, which are all definitely processes that you can take forward with you, as your team grows. It's great to hear. So we have a couple other questions for you. I have a couple. While you're just talking, when you got flooded with all these requests coming in, right after the pandemic hit, what kind of prioritization system, or how did you deal with that flow of requests that maybe your team hadn't experienced before?
It's a great question. We adopted on the fly for that. So we did originally set up sort of a scorecard that would help us prioritize level of work. Was it a regulatory request? Was it an audit request? What's the ROI? Things along those lines. And it helped us sort of drive, even though we weren't getting a ton of people knocking on our door, that was the approach we were going to take around prioritization. When it came into the pandemic world, quite honestly, we were flying by the seat of our pants. So what we did was, what was the biggest risk exposure to the bank? So any request that came through our first line that was dealing with those loans immediately out of the gate was a big thing. Second and third, where we were immediately losing money. So unemployment insurance fraud was big. PPP was big as well because of how quickly we needed to turn around those applications. So that was our focus. If other areas came to us with requests and challenges, they had to, more or less, we had asked the question, well, how big is the risk? Do we have a chance of losing money here? What's going on? Until we got settled. Once we got settled, now we go back to that approach. We do have a standardized intake form now, where those questions are asked around what's the level of risk, what's the level of potential money lost to the bank, is this a regulatory concern or not? We'll still get the one-off phone calls where somebody calls me up and says, hey, crap's hitting the fan right now. Can you help me out? Sure. So, and we'll take those into approach. But right now we're sitting on a backlog of probably about 30 different analytics that people want us to do for them. We try to do as much as possible first come, first serve, but anything that hits those certain dollar thresholds or and it's hard to prove out dollars, right? We don't get a ton of those, quite honestly, but regulatory concerns or new products, new services, things along those lines, we'll jump into right away.
Great. We got another question. I think we touched on this a little bit, but maybe we can give a succinct answer. What kind of challenges do you face with respect to adoption? And what do you normally do to improve the adoption of analytical output from your team?
So I think the biggest challenge that we run into is that's the way we've always done it. right? So when people hear analytics or hear automation, I think there's an immediate go-to of somebody's coming in to, you know, make my job go away, right? To automate what I do day to day, and that's definitely not the case. What we want to do is turn people into critical thinkers instead of button pushers. So if you're spending all day looking at a 20-page report and checking next to it, that's probably not the best use of your time or the bank's time. I could automate that for you, and then you could look at your job differently and critique risk differently. Or maybe you've had something sitting on the side of your desk for the past 2 years that you just couldn't get to because you don't have the time to do it because you have to do your day-to-day tasks. So I think that's the biggest thing of getting over that hump of, we're not, you know, if you've seen the movie Office Space, we're not the Bobs coming in to take your job away. I want to make you better at your job. Will there be expense reduction in the future? Yes, let's be honest about it, right? There's some things that have to happen in order to keep a close eye on the bottom line. That's, you know, the bank's in business to make money, you know, not necessarily to make every single employee happy, right? So yes, that'll come into play eventually, but we just want to, right now we're trying to make people better at what they do day to day. So the second part of the adoption is, you know, what I tried to say earlier is we try not to tell the story ourselves. We're trying to get our stakeholders to tell the story for us. Go out for us and say, look at what this team was able to do for us, and might be able to help you too. So there's newsletters that come out once a quarter where we're highlighted in it. There's, you know, part of the 3 to 5 year strategic plan for our chief risk officer is more adoption of analytics and automation. So that helps drive that forward as well. But, you know, let's be honest about it. There's been areas where we've been really, really good at, and areas where we've been really, really bad at it. You know, we're doing a great job of supporting our operational risk teams, our compliance risk management teams, and our regulatory affairs teams, but we're yet to even scratch the surface for model risk management or credit risk, and there's a lot there. And it's building out the relationships, it's establishing trust, and it's not coming in and automatically being like, let's change your process, let's you know, this is a different way of thinking. People that are reluctant to change are going to run away from that type of attitude. So, you know, it's got to be a partnership. It's got to be an understanding of what things we've done in the past that might be relatable to them. And we're still struggling in those spaces. There's no doubt about it. I can't sugarcoat it and say we're doing anything, you know, great here, but the way we sort of think about it is, and I'm using all these cliche terms, but I'm going to use another one. Success by 1,000 paper cuts. Right? So the small little wins that we could do are going to build up, and then maybe there's something there that's relatable to somebody in credit. Maybe there's something relatable to somebody in our model risk management teams. But our job is to support them and put them in positions to think differently and succeed. And quite honestly, there might just be situations where that doesn't exist. And if it doesn't, that's okay. But as long as they know that we're there and what we can provide, and we keep in touch with them, then we're gonna, you know, I feel like we'll eventually have some opportunities in that space. So it's been an uphill battle. I can't say it's been easy. The wins that we've had have been great, but we still have a lot of things that we need to do, that to get us in a spot where we could see, you know, succeed on a consistent fashion and consistent manner, and really start to do those major things that I'm talking about, advanced analytics, right? Have something sit over a database that's just running through models for us all the time. We're not even remotely close, you know, machine learning, artificial intelligence, but our goal is to do the baby steps to get there. And in the meantime, prove out value through our ROIs that we're showing to, you know, our stakeholders, and at the end of the day, the chief risk officer, because he's the one that's helping drive this thing forward.
Great, thanks. So we've got one more question, and then we're going to wrap up. We saw this come in on the Q&A. What do you wish you knew then that you know now?
That's a great question. I wish I knew the pandemic was going to happen so I could be prepared to have my kids home with me 24/7. No, I'm joking around. I thought that quick wins were going to be plenty, going to be everywhere, and that I was going to have more work than I could ever imagine my team doing. That has not been the case. There's been pretty significant ebbs and flows. Like I said earlier, COVID actually helped us by throwing us in the spotlight. Without that and without specific use cases to show value, I would have had to change my strategy significantly and, help just come up with ideas and see what, stuck, quite honestly. I was struggling for the first 8 months of trying to find that value, and things would pop up. We'd jump right into it. We'd, be all gung ho and probably go too fast. So I think that's the biggest thing is don't assume that there's going to be work for you right in front of your face 100% of the time, especially where people don't understand how data can be useful, how technology can be useful. You need to have that relationship building aspect of it as well, and realistic expectations that it's going to take a while to really find value. The other thing is I did go and focus in BSA/AML, and I did go and focus in the areas that I was comfortable with.
Right.
That might have hurt me. I'm still not sure yet, but that might have hurt me because I went to my old and trusty. Don't be afraid to sort of step outside the box and what is it my grandfather used to say to me, be brave enough to suck at something new. Again, cliche terms across the board here.
Yeah, we got a good list going, but
yeah, exactly. So, but that's probably it, right? Of don't expect that people are going to hear analytics and hear automation and be crawling up your email chain saying, oh my God, I need your help right away. Because I did expect that, and it didn't happen. So changing my strategy a little bit out of the gate probably would have been really useful. And we're still trying to do that now, of changing our approaches and getting out to people and getting a momentum going so that we don't go through those ebbs and flows.
All right, great. Thank you so much, Chris. I think we do have one announcement from the PerformLine side before we wrap up. Thanks again, Chris, for joining us. For anybody on the webinar today who's going to be in the Dallas-Fort Worth area next week, so will we. Wednesday, October 6th from 5 to 7:30, we're hosting our next Comply event as part of the roadshow. You can register at that link at the bottom of the screen there. So, do a quick screenshot. I'm sure we'll be following up with some more email information on all of that. But once again, if you're in the Dallas-Fort Worth area, next Wednesday, October 6th from 5 to 7:30, please come out. We'd love to see you in person. It's been great seeing some other people, face to face as we move forward through all this. Chris, thanks again for your time today. Really appreciate it. It was super insightful.
Thanks for having me, Mike. Thanks for everybody from PerformLine for having me. I appreciate it, and look forward to talking to you guys again sometime soon.
That sounds great. Have a good one.
Take care.